taking the brunt of it, down more than 3%. And now it could be facing some new competition as chip startup Cerebras files for IPO. Our Seema Modi's on the story for today's Tech Check. Hey, Seema.
Carl, Cerebras is backed by some of the biggest names in tech: Coatue, Benchmark, Altimeter Capital. It designs artificial intelligence chips for inference that its CEO, Andrew Feldman, an ex-AMD executive, says are cheaper than Nvidia and AMD's. And unlike the industry's obsession with smaller chips, Cerebras wafers are over 50 times larger than its rivals, which Feldman told us helps speed up processing. Now, amid this AI boom, the company's S1 revealing growth is accelerating with an over 200% jump in 2023 sales, though not profitable. Some of the customers include GlaxoSmithKline, the U.S. government, and a conglomerate in the UAE named G42 that makes up a majority of its revenue, 87% of sales in the first half of this year. The S1 also noting that the dependence on its relationship with G42 opens it up to a number of risks, like changes in demand from the state-backed tech company or changes in regulation. Now, it's no small feat, of course, going up against a company like Nvidia, the dominant player in AI chips, and there's a high switching cost. That's why Wall Street analysts say the big question is whether Cerebras can secure a large order from a hyperscaler that currently uses some of the bigger names like Nvidia to build their AI models. Similar to Nvidia and the rest, Cerebras does fab its chips with Taiwan Semiconductor. Now, I'm told a 5-year-old semiconductor company plans to go public this fall, targeting a valuation of $7 to $10 billion. Some investors in the private tech market are optimistic that this could open up a new wave of AI IPOs. Cerebras would be one of the first companies to debut from one of the many AI startups cropping up in this new era. How investors, of course, receive it in the public market will be a big signal for new IPO hopefuls, guys.
Hold on to your portfolios, stock market enthusiasts, because the tech titans are shaking up Wall Street in a way we haven't seen in years. In a whirlwind of skyrocketing stonks and emerging competitors, Nvidia Corp stands tall, capturing imaginations and profits with its accelerated computing and artificial intelligence innovations. But wait, there's more. New revelations and competitors are stirring the pot in this already volatile market. Curious yet? We thought so. The mention of industry giants like Microsoft Corporation, Meta Platforms Incorporated, Amazon.com Incorporated, and Google parent Alphabet Incorporated ensures you won't want to miss a beat. These powerhouses aren't just sitting idly by. They're actively shaping the landscape of the tech stock market. So fasten your seatbelts and prepare to be thoroughly entertained as we dive into the electrifying developments, charting the course of these colossal players and their impact on the broader market dynamics. Welcome back, everyone, to Investocracy.
I know it's too soon for you to talk about this company specifically, but at least it raises the issue of companies that are out there that want a piece of this AI pie. How should we be thinking about these newcomers relative to the heavyweights like Nvidia?
Yeah. So there's a number of areas of competition for Nvidia, which makes sense. It's an enormous potential opportunity, and all the dollars right now are flowing to Nvidia. And you've got other merchant suppliers like AMD or even Intel. You have hyperscalers doing their own products, and then you have startups as well, right? And I think for a lot of the startups, it's difficult. They don't have scale. They don't have ecosystem, and if their pitch is, we have a chip that's better than Nvidia, I think that's hard because, with every generation, Nvidia has a chip that's better than Nvidia, and they have the software and all the ecosystem support that goes with it. So, I'm not going to comment on Cerebras, but they're doing some other things. I mean, clearly, they're gonna try their best at this point. But in general, so far it's been a winner take all. And I've said this before, it seems like it's Nvidia's game to lose, like more broadly.
Well, I mean, it's winner take most, right? I mean, it's not like Broadcom hasn't done well.
No.
The issue, though, is that, as it's done better, its multiple's gone up, hasn't it? So it's not as cheap as it was viewed to be before.
That's true. And so to be honest, if you're talking about the real competition, I actually think it is more on that hyperscaler side, the cloud vendors doing their own chips. And this is an area clearly where Broadcom really shines. They're doing a lot of the ASIC work for the key players like Google and Meta and some others. It's a very big business for Broadcom. They said $12 billion in total AI revenues this year. I bet $8 billion of that 12 is probably custom AI accelerators and ASICs for those large guys. And look, I actually do think that is real, and it will get bigger. And I wouldn't be surprised if the penetration of ASICs relative to the broader TAM gets bigger and bigger over time. It's kind of apples and oranges in some sense. It's more, those stuff is more used for the internal workloads of the hyperscalers versus workloads where you need programmability or anything that's customer facing or enterprise. So they are kind of two different markets. But yeah, I mean, this is a market that's already sizable and it's getting bigger. But to be fair, I think the overall opportunity, the TAM is big enough for both of them to benefit. I don't think it's a matter of one necessarily winning over the other. The market's sizable enough where I think both of them can win. And I like Nvidia and I like Broadcom. We like both stocks.
In the last 12 months, Nvidia has seen its stock price explode over 171%, driven by a perfect storm of AI excitement and advanced computing capabilities. This astronomical rise, however, does come with certain caveats. Analyst Gil Luria of D.A. Davidson has flagged a significant dependence on 4 mega customers: Microsoft, Meta, Amazon, and Google. These hyperscale titans who are heavily investing in AI have also been developing their own in-house chips. It's like the start of a big-budget thriller where the hero's greatest allies might just turn out to be rivals. Betting on Nvidia remaining unchallenged in this booming market could be akin to betting on a horse race with a one-legged horse. Let's dive deeper and break down what's really driving this excitement and skepticism in the market. The AI craze, which has propelled Nvidia to dazzling heights, has also raised eyebrows among certain analysts who caution that the frenzy may be overhyped. Nvidia's delays in releasing products like its Blackwell GPUs have added fuel to these speculative fires. In essence, the tech market is on tenterhooks, wondering if Nvidia's meteoric rise has sustainable legs or if it is walking the thin line of overvaluation. This scenario finds investors and market watchers grappling with the age-old question: will the bubble burst or expand? And at what cost? Beyond just Nvidia, the market for AI-driven solutions is heating up, with several new players making powerful entrances. Cerebras Systems Inc., for instance, has recently filed for an initial public offering, IPO, with the SEC. This AI computing firm aims to tussle with Nvidia using its flagship CS3 system, capable of handling complex AI workloads and powering AI supercomputers. Cerebras' sales have jumped from $8.7 million to $136.4 million in just a year, showcasing an impressive growth trajectory. However, like many hyper-growth tech companies, they also reported a net loss of $66.6 million, a slight improvement from a loss of $77.8 million the previous year. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Well, I mean, this is one of AMD's like broader issues. I mean, in the near term, and by the way, they have an AI event coming up in a week or two, and we'll get some new product announcements, and we'll see. And they've suggested they'll do $4.5 billion or more than $4.5 billion this year. I think expectations are probably for 5+, and I don't want to knock them too badly, because it was zero a year ago. I've said this before. So on an absolute basis, ramping up, $5 billion of a product from zero in a year is nothing to sneeze at. In the grand scheme of the dollars that are getting spent, though, it's not very big. Nvidia will do well over $100 billion in revenue this year. Again, Broadcom's going to do double digits in total AI revenues. So it's not that big, but it's good. But long term, I mean, you bring up a good point. Like, I understand the need for a second source, but most of AMD's exposure right now is at these larger hyperscalers. And is that second source, does it need to be the AMD or is it Broadcom? I think that's an open question at this point. Yeah.
Two quick ones before I let you run. What's the outcome, the end game, whatever you want to call it, for Intel? What happens here?
Yeah, I mean, that's a great question. I mean, they've kind of bet the company now that their 18A, their next generation process that they call 18A, they're betting the company on its success. And so that's I guess what we're waiting for. And if it is truly successful, maybe you could see a revitalization. They bring a bunch of, they're outsourcing a lot of stuff to TSMC right now. It's killing their margins. You bring the stuff back in, the margins get better. Ideally, it's a better process so they can take back market share and they can charge more because they're better products, and it gives customers a lot of confidence to put a lot of foundry volume there. And that's how you kind of build to the targets that they put out there for 2030. And keep in mind, it's only 2024 right now. There is a lot of wood to chop, though, between now and then. And if that process does not knock it out of the park, if it's not successful, then, there are some more severe scenarios that may come to play. And to be clear, I don't think they're desperate at this point. We've made this point before. I think given the OPEX cuts and the CAPEX cuts and the dividend suspension and the government funds and the private equity funds that they've gotten, I think their cash position is okay. So I don't think they're desperate. They don't need to make any crazy moves, but they probably got a year, 18 months, like to see if H&A really holds muster or not. And if not, then there are more severe scenarios that may come to mind.
Notably, the majority of its revenue for the first half of 2024, almost 87%, came from a single customer, Group 42 Holding. According to Bloomberg, Cerebras is eyeing to raise up to $1 billion in its upcoming IPO, aiming for a valuation between $7 billion and $8 billion. This ambitious move is definitely one to watch, as it attempts to establish itself as a formidable competitor to Nvidia. Adding another layer of complexity to the narrative is Huawei Technologies in China. The company is now offering its Ascend 910C processor samples to Chinese hyperscalers, many of which are Nvidia's existing customers. This move comes on the back of the US implementing advanced semiconductor tech sanctions against China, nudging Chinese companies to source domestically. This tectonic shift could potentially upend the tech ecosystem players have become so accustomed to. Another layer that adds intrigue to this unfolding drama is the continual evolution of AI technologies themselves, with constant breakthroughs that make predicting the future a near impossible task. Companies like Nvidia and Cerebras are not just competing against each other and established giants like Microsoft and Amazon, but also against the rapid pace of innovation that could at any moment introduce new paradigms in computing. From the development of quantum computers to the optimization of neural networks, the very fabric of AI and computing continues to stretch and redefine itself. As much as this feels like an intense drama, humor isn't far, especially when we remember that the stock market, in its essence, can be as unpredictable as predicting the weather with a broken barometer. While the highs and lows may entertain, the stakes are very real. The takeaway here is that companies like Nvidia and Cerebras are navigating a fast-moving, ever-shifting landscape, and knowing where to place your bets can feel like trying to catch lightning in a bottle. From AI breakthroughs to intense rivalries and geopolitical shifts, the landscape is being reshaped right before our eyes. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
GameStop. It's like we should all own GameStop because we heard it from the person cutting our hair. I don't think so. So it's the same dynamic. You have to have something broader, and the professionals who are buying these stocks, I mean, we know the companies we're buying. It's not just the S&P index that's moving higher. It's other buying in addition to it.
I'm not suggesting we're not going to have NVIDIA earnings watch parties anymore because they're still going to be a thing, but it does feel like a little bit of the fervor about that has cooled a bit, which is good. I mean, you make the argument that's good. Now, you know, outside of the mega caps, you do have the filing of an IPO by a chip maker. It's Cerebras. Maybe they'll take on Nvidia. The latest funding round valued that company $4 billion. Backers include Sam Altman, Code2 Altimeter, Benchmark, plans to go public in the NASDAQ. I don't know. B of A today says the highest owned semis still are relatively underweight. If you want to believe that, Steph, what do you make of that? That the highest owned semis are still relatively underweight.
I know I am.
Well, yeah, but that's what happens when you're at 8% of the S&P, you know, or 6%, 6.5% with Nvidia and whatever it is, 2% with Broadcom. That's 10% in two names, close to. I mean, you can't be overweight. Otherwise, you only have 6 stocks in your portfolio.
So that's not. That stat is not telling of
not relevant.
An opportunity that exists. Yeah. That's how it's being painted.
Yeah,
I think it's interesting, actually. I mean, I've been adding to Broadcom and Lam Research on the kind of the declines, if you will. They're volatile stocks. You get a look every once in a while, right? So I think that Broadcom, to me, is just the one that I wanted to bet on versus Nvidia. I mean, I'm still up quite a bit in it. It hasn't done as well, but I think you can still make a lot of money. I mean, why I like Broadcom only because that their AI business certainly is growing 3 to 4-fold, right? But they also have VMware, and that actually changes the story completely in terms of software, in terms of margins and free cash flow. And so to me, that's the one I'm betting on. But I kind of like the fact that if that is in fact true, that people are underweight semis, that's not a bad sign.
In conclusion, Nvidia's towering presence in the AI and accelerated computing market is exhilarating, to say the least. But a healthy dose of caution is warranted given the burgeoning presence of well-backed competitors and potential market overvaluation. Currently, Nvidia's stock stands on the precipice of potential massive gains and probable substantial risks. Investors need to stay keenly informed, keeping an eye on emerging players like Cerberus and the shifting global market dynamics driven by giants like Huawei. Forecasts for Nvidia remain optimistically bullish, given its prowess and entrenched position in AI computing. However, diversification and strategic caution might be prudent. No one wants to be caught off guard in a market that's akin to a high-stakes game of chess, where the next move could decide the fate of fortunes. What do you think? Is Nvidia's stock a golden goose or a bubble waiting to burst? Share your thoughts in the comments below, and let's keep this conversation rolling. Every insight adds a new dimension to the ever-evolving saga of tech stocks. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.